Could we see another black swan in the next 5 months? I'm not sure, but if it's the case, I just saw a trade that is going to have a profit potential of $188 million if we see something worse than what we saw in March. So let's take a look here at the volatility index and talking about March. March was the all-time high that the volatility index had not only peaked, but also closed. So it peaked at 85 and it closed at 82.50. Right now we're at 22 and we're coming into the mean average of about 15. So the trade that I want to talk to you about and share with you was this trade here that occurred in the January 2021 contract here that has 158 days to expire. And the person that put this on, the institution, it's an institution that put this on, they bought the 75 call and they sold the 150 call here. So they did that for 76 cents. And the outlay on that is $1.9 million. 1.9. So this is a hedge. This is not somebody that's betting directionally on volatility. This is a hedge against a black swan. But it's interesting to understand how they're structuring this trade and also how they're hedging their risk in their portfolio. So if volatility does spike, if we do see another black swan, which there is a lot of uncertainty in the world, and we're seeing a lot of unusual things happening in the financial markets. So there's a lot of things that can happen. Does it happen in 5 months? I don't know, but there's an interesting way to position off of this and understand how to benefit from this information. So the opportunity for them on this is $188 million if that were the case. Now, volatility, as I had mentioned, is at the lower end of the range. We are coming into times in the September and October timeframe, especially into an election year, where we typically see the markets become a little bit more volatile. So I would say on this that we look at volatility. If volatility were to spike higher, that means that the market sells off. Best way to position for that would be to look at the SPY and possibly look at something in the November timeframe and to buy some puts that are out of the money and just to use that as a hedge. As I had mentioned, we do typically see markets pull back or become a little bit more volatile. And with the election, could see some more uncertainty come into the marketplace. We are coming back off that extreme high. We could see volatility. We have seen volatility come into the marketplace. Good way to hedge yourself, but also understand how institutions are hedging themselves. So that's a position that I just showed you that they're positioning for a black swan event. Does it happen? I don't know, but it's interesting when someone puts $2 million down on something that has a 99% chance of not happening.